I want to go back to those Einhorn comments, him talking about the market being very expensive right now. I'm just looking at the numbers. The S&P trading at about 23 times forward earnings. So I want to ask you, do you agree that the market is, number one, very expensive and that right now isn't necessarily such an attractive entry point if you are a long-term holder? Agree with that thesis, yes or no?
I think that we agree with the idea that the market's not necessarily cheap right now. And if you look at earnings for next year where the S&P can do, let's say, 275, 280 in earnings, we don't see a cheap market right now. But at the same point in time, we think we can earn into that market. And so as you talk about when you should be investing, we think that investors should continue to leg into markets. And you're going to get some volatility here as the market reacts to some of the policy moves as it gets ready for the new year. We hear more earnings. And so we do think there are going to be some opportunities here to reinvest into the market. And it's not necessarily easy enough to say, well, you should just wait on the sidelines.
All right, so just on that thesis, he's saying it's kind of an expensive time, not a great entry point. Is there a real alternative? Of course, we've seen some of the Trump trades like Bitcoin. Also, the gold actually reversed from a Trump trade, moving lower now. Where else could you put money if you're looking for opportunities outside of equities?
Well, I think the challenge right now is what we've seen with the bond market, Frank, as it relates to yields have moved higher with concerns around fiscal policy and the deficits. And so when you start to transition, you look around and it's a zero-sum game. And as Chairman Powell said in his presser last week, we don't guess, we don't speculate, we don't assume. And that assume part is we don't assume necessarily that the economy is going to lift off here. So what other asset classes? We think you broaden into equities. We think small and mid cap can do well in the United States. We think you can pick and choose on the international front. Developed international is not as appealing to us. Emerging markets, while it may have a little more volatility, could actually be interesting as we go into 25.
All right, those other comments from Nelson Peltz. He was talking about the Trump trade in large part, saying, it just can't go on forever. Something's going to disrupt it. I want to ask you about one big part of it, Bitcoin and also the Bitcoin-related stocks. What's your view on that? Do you see more upside to that, especially with the sense that the administration is supposedly very supportive of cryptocurrency?
We still believe that Bitcoin has a place in portfolios, but to your point, we think it may have gotten a little ahead of itself here, and it has ripped tires since the election. And really with just the belief that across the board, cryptocurrencies are going to be leveraged, and we're just not convinced that necessarily they're going to be quite as valued and highly valued as they have been of late. So we still think they have a place in portfolios, but quite honestly, we think they may have gotten a little ahead of themselves, and we'll see maybe a bit of a pullback as we go through the end of the year and into next year.